In a major budget announcement ahead of Tuesday's budget release, Labour has announced two major measures aiming to boost community services and collect more in petroleum resource rent tax. The first measure is to limit the proportion of the petroleum resource rent tax, known as the PRRT, assessable income that can be offset by deductions. Starting July 1st, the percentage will drop from 100 to 90. This will help bring in more money from the offshore LNG industry and support the Labour government's budget repair efforts. The second measure is to index government funding for community services to match rising wage costs. This means that the government will no longer use the 5-year averaging of the wage component when allocating funds to services such as Medicare benefits, home support, affordable housing, mental health, and more. This will help ensure that funds go where they are most needed, and result in higher wages for those who provide services to the most vulnerable in our communities. Overall, Labour's two major budget measures are expected to raise $2.4 billion in petroleum resource rent tax over the course of 4 years and create a $4 billion community services boost, all while keeping the budget at or near surplus. These two major budget changes are among a few additional, modest but meaningful, revenue-raising measures coming with the budget release this week, such as the multinational tax crackdown, an increase in tobacco excise and, slightly less generous, superannuation tax concessions. The Labour government recognizes that these measures than some alternatives proposed by the Grattan Institute and the Greens. However, the Albanese government remains committed to the budget repair process and providing vital services for Australians that rely on it. This budget is about allowing quality of life and economic prosperity for all.